What's up, guys? I'm Mike from StockedUp. In this episode, we are talking about the breaking news that happened last night. So President Trump came down with a positive test for COVID. So obviously, this is not good news for the markets. We saw when this news came out, the markets went straight down. But we actually saw them come back up in once the market opened. But in this video, we're going to talk about what impact this catalyst has on the market for the short term and the medium term / long term. So make sure you guys stick around to the end of the video. It's not going to be too long, but it is pretty important. So obviously, it is not good news that Trump has tested positive for COVID. You know, obviously, he is older, and COVID affects the older population more than it does the young population. So, you know, he is going to be in the best hands in the world. So he's going to have some like the best doctors and everything like that on his side. So, you know, hopefully he recovers. But obviously him having COVID, it's not good. You know, it's not good. So that's why we saw the market fall. And then we also saw this article from CNBC saying that he's experiencing mild symptoms. So, you know, that's good. It could be a lot worse. But I think that this catalyst is just going to add to the crazy volatility that we've been seeing in the markets. You know, we have normally September is more volatile than usual, but also coming into an election year, plus Trump having COVID, plus the stock market just going crazy this year too. We are in for a very volatile next couple months. September already was so volatile. We're just looking at the SPY chart right here. But, you know, you see days where the market gaps down, you know, it opens all the way up here, runs up, and then ends up closing lower. And then the next day it gaps up, runs up, next day it gaps up, and then closes lower. Like what we're seeing right now are some of the most volatile times that we're probably ever going to see. So if you could trade during these markets, you're going to do just fine when the markets aren't so crazy. Like we can see that the market is moving right now. Like I said, we gapped down and then we actually ended up coming back up, but I'm not too confident in this run up. Like we're still in the middle of the day, but if we look at the QQQ, it's actually doing worse than the S&P 500, which is unusual to say. Like the SPY is down about 0.8%, but the QQQ is down 2.5%. And then we have the Dow down about 0.5%. So, you know, we're just in for a lot of volatility. And if his symptoms do end up getting worse, I would expect the market to continue down. But we also have the news with the stimulus talks. So if a bill doesn't get passed there, that could also add to the market falling. Of course, the election just adding to volatility. So I think between right now and the next couple months, I know that we're in for a ton of volatility. But if Trump does get worse, if the stimulus bill does not get passed, I think we're going to have a pretty good buying opportunity for long-term investors. And I really recommend to just not get in your entire intended position all at once. So for example, let's say we look at the S&P 500, right? And like, let's say you want to get 100 shares of the SPY, right? You know, you don't have to buy 100 shares all at once. Like if you see a dip down to 320, maybe buy 25 shares. And if you see a dip down to 280, buy another 25. And then you can just add more as time goes on. Like no one's ever going to catch the bottom, but by what's called dollar cost averaging, or averaging in, just buying a little bit over time, that can really help with your average price. And especially if you want to get in for the long term, that might be the way to go. So just a little recap. Obviously, Trump coming down with COVID, not a good thing. If he does get worse, I would expect the markets to continue. And we also have the stimulus bill in place. So if that doesn't get passed, we could also see more movement to the downside. But either way, we are in for a ton of volatility. And now is not the time to be trading heavy, because we're in such a volatile market. So, you know, it's not a bad idea to even sit on the sidelines. Like, you know, now is the time. Like if you don't see any plays, don't force anything bad. You know, there's always going to be more opportunities, and, you know, the market is going to get less volatile than this. So thank you guys so much for watching this video. If you guys have any questions, let me know in the comments down below. But other than that, Thanks for watching.